You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by Cboe Live Vol. Cboe Live Vol is the leader in equity and index options trading technology, providing professional and retail traders with the most sophisticated options risk analysis, compliance, and trading tools. Cboe Live Vol offers a broad spectrum of advanced trading technology, including the Live Vol X, next generation execution platform, and Live Vol Pro, the new standard in options trading front ends. Visit livevol.com for a 15-day free trial today. And by Russell Investments, the home of Russell Indexes, which calculates approximately 700,000 benchmarks daily, covering 98% of the investable market globally, including more than 80 countries and more than 10,000 securities. Approximately $4.1 trillion in assets are benchmarked to Russell Indexes. For more information on Russell Indexes and RVX, please visit russell.com/indexes. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
Welcome back to Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as from a little thing we like to call around these parts, the Options Insider Radio Network. And what does that entail? Well, it entails about 15 programs for you guys to mainline straight into your ear holes. Of course, all the hundreds of archived episodes of Volatility Views. I was going back through them, talking with someone, I should say, the other day, and looking at some of the archive. We've had a great guest roster on this program. If you haven't checked out some of the great guests we've had, listeners, go ahead and dive on into the back episodes there. I think you'll find some interesting stuff. Nobel laureates, leading practitioners and traders and academics and researchers in the world of volatility, and pretty much you name the flavor of vol, we've discussed it here on the program. It's been pretty fun. Maybe we'll have to find some way to make it even easier for you guys to discover all that. We got some ideas on that front, hopefully coming soon. And of course, the easiest place for you guys to find all that great content, the mothership, the flagship, theoptionsinsider.com. While you're there, click on the Insider Radio Network tab, and your audio journey has begun. And of course, you can always find us iTunes, TuneIn, Stitcher, all those fun places, iHeartRadio, even via our own mobile app available for iOS, Android, and the beloved Fire OS. And of course, however you listen, downloading, streaming. Unfortunately, no live stream via Mixlr today. Some fun technical issues going on here in the studio today, preventing us from going live. But don't worry, we'll be back live next week. It doesn't mean we don't have a show in store for you. And joining me on the old program today, starting off, let's go in order of proximity. I believe he's in the corner office this week, so we'll start there with Mr. Senior Instructor, a.k.a. soon-to-be Dr. VIX, a.k.a. Mr. Corner Office, Russell Rhodes, the Senior Instructor over there at the Options Institute. Mr. Rhodes, welcome back to the program. Are you indeed beaming in from the CBOE Corner Office this week?
I am in the corner office. They installed one of those cool standing desks, so I'm standing up and moving around, working off nervous energy while I talk to you guys.
That's actually where I'm recording from right now as well. We have another desk here in the studio, and when we have some issues going on in the main setup, we use the backup, which is where I am right now. So if we sound a little bit different, listeners, blame Russell. It's all his fault. And also joining us, a last-minute switcheroo. Glad he was able to put his bass fishing aside. I know he loves his sea bass tacos, listeners. He's making a big sacrifice for us today. Joining us on the program, the rock lobster himself, Mr. Andrew Giovinazzi. Mr. G, welcome back to the program. How goes the fishing and the tacos?
The fishing, non-existent for the last couple days, which is, I have to say, it's quite sad. So if I'm doing this show, suffice it to say, I am not fishing today. However, some sort of taco treat will be had this weekend.
So this is the rare moment where you and I are both on fishing parity, which is to say I have done no fishing either. So therefore, two of us equal fishing, which is a rare scenario. Going forward, I would have to buy your leg of that spread, I would think.
And total crap, I might add. Yeah. Total crap.
So that spread came in, but it should soon widen out again to its usual plus 50 or so, however many times a day you fish out there. All right. And with the team assembled, we're going to dive right on into the volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, and welcome to the Volatility Review. This is indeed the portion of the program where we break down what's cooking, what's moving, what's shaking from the week that was and indeed still is from a volatility trading and analysis and research and developments and trends and all sorts of other fun things. And what an interesting week it was. It started off with Vol, a.k.a. our friend, the VIX Cash, hovering at some fairly lofty levels, and we were all prognosticating on the show last week about what would happen post Miss Fed and her crew getting together and laying down the hammer, or perhaps not so much, on the old market. And that did indeed come to pass this Wednesday. Miss Yellen and her crew coming in, and after much noise, they ended up signifying nothing really with yet another, we're going to kind of shrug our shoulders, a resounding meh, as I believe the Rock Lobster likes to call it. And we had much loftier levels earlier in the week from a VIX Cash perspective. Of course, last week we were flirting with the 20 handle, and even coming into this week we were still in the lofty teens. But that has since pretty much given up the ghost. VIX Cash hovering right around the 12 handle as we're kicking off the show here around noon Central on Friday, September 23rd. So whatever Yellen, whatever Fed premium was lurking out there in them thar hills has pretty much been crush-a-palooza, to use the technical term. It's a VIX apocalypse redux, if you will. That said, there still is some juice in those futures out there. The front month future is about three, almost 3.5 handles a premium to the cash, which is still fairly aggressive. So there's still a lot of fun stuff to talking about. And the market certainly still pricing in some fall the farther out you go. You get out to like decent Jan, and they're hovering in the high teens, getting close to 20 again. So there still is some richness in them thar hills. So if you're looking at VIX Cash and saying, I got to scoop this up, remember, before you send the emails to us, remember the futures, VIX futures term structure, the answer to almost all of your questions. And so why are these options so rich? VIX futures term structure. That said, we'll start with you, Mr. Rock Lobster, because I know you've been so deep into the bass fishing that or lack thereof, I should say, that you've had a lot of time to prognosticate and pontificate on vol. So what's catching your eye this week, sir?
I have to say we had the vol crush. We talked about it Monday on the option block. So I thought it would get crushed, although I have to say they crushed it a little more than I thought. And I guess all the early pronouncement of we should actually change the name of the show to the Fed show, because the Fed has effectively destroyed or taken control of volatility in the equity market. Maybe that was just their whole diabolical scheme in the first place, and Russell can speak to that. But I do think that they basically said, okay, we'll have maybe a rate and change in December and one in 2017. That kind of, it sort of put the smack daddy on rate discussion and kind of volatility over rates in general. So I don't think we're going to see and the market responded. I mean, we rallied, but again, I think we're running out of reasons to rally if we don't have any more QE to rally on, because the economic growth has been kind of, besides tech stocks performing to kind of drive stocks up for the most part, there hasn't been a whole lot of like great economic growth to go around in the G7. So I think, and that usually is a recipe for lower vol overall. And that's what we've got. So we have a 12 VIX, we have some expensive futures, maybe going into the election, we might pick up a little from that, but I still think we're kind of in a little vol dead zone here for another week or so.
Not to toot my own horn too much or preface the crystal ball, we'll get to it in a little bit, but if we do hold at these levels, my 11.75 prognostication from last week looking pretty strong as of right now. So we'll see. We'll keep our fingers crossed there. I know Russell hoping for a little bit of a vol boost to the end of the episode so he can get his 13 handle, 12.99 to be precise. His 13 handle prediction can come true. That said, Mr. Rhodes, in addition to buying all the vol last week, what else has been catching your eye this week from a volatility trading and analysis and activity perspective?
Hey, just because I predict a higher VIX doesn't necessarily mean that I'm loading up based on that prediction. Because I'm only here for educational purposes only. So I do not want to be associated with that expectation. And if anything, there's a reason that we often say that retail buys volatility and institutional sells. So I don't want to be painted with that brush. It's just amazing to me that back in the day, every time George Bush came on TV, he just had to sell stocks. And I swear, I think that Janet Yellen's batting about 975 or something with respect to where the S&P 500 is 24 hours after she says anything. She is not that we want to picture this, but she is the best cheerleader that I think equities have.
And it has been interesting to watch, of course. Yeah, she cheerleader. I guess that's one term for her. But it has been interesting to watch. Were you kind of surprised, like a lot of people on like the Rock Lobster here? Sounds like that vol got crusholed, or what was the technical term Andrew used? Oh yes, putting the smack daddy on vol.
It got smack daddy, I believe. Smack daddy was the term.
Were you surprised at the smack daddying?
Yeah, I was. I didn't expect it to. Actually, I was hung up on some things, so I wasn't able to take any action in front of the Fed. But if I had done anything, I probably would have put on a 10-point wide iron condor or something like that using the weeklies that expired after on Wednesday, and I would have definitely been wrong because I didn't think that volatility would get killed due to a rally in the equity market. I thought it might trend a little bit lower because equities didn't do a whole lot off the meeting, and I felt like I thought what would happen after the meeting is we would switch to a wait and see, but be a little bit on edge type of posturing through the election and then into the December meeting, which is what everybody seems to be focused on now.
Well, as I was saying earlier, the VIX cash is taking it on the chin. The VIX future is still a little bit reluctant to give up the ghost. Like I said, about almost 3.5 point premium there to the front month future, and it kind of just goes up from there. Very, very steep contango still out there in the old futures. And Andrew, you and I were kind of chatting yesterday on Option Block. Might be worthwhile revisiting that topic here for our Vol Views audience. Obviously, VXX, a popular, shall we say, retail volatility trading vehicle. We've maligned it often on this show, sometimes fairly, maybe once in a while unfairly, but it does what it's supposed to do most of the time, which is reliably, and I think as you like to say, predictably, crappily erode over time. But we're into this period now with this kind of steep contango out in VIX futures. Not exactly, shall we say, a boon for long-term holders of VXX. Why don't you walk our listeners through a little bit of how this steep contango, VXX is going to be crappy on a given day in terms of just eroding, but now we're in this kind of scenario. Walk our listeners through exactly what that still relatively severe contango out there in the VIX futures, what that means for your proverbial grandma out in Iowa who wants to come in and buy a 10 lot of VXX. How's that going to look for her 6 months from now? Or not even 6 months, a month from now.
A month from now? Well, if the grandma from Iowa, depending if she rolls up her basket and loads her basket up with VXX.
She's a very sophisticated grandma. I forgot to mention
she's hugely sophisticated grandma. Probably not my grandma, but somebody else's grandma. And what she's buying right now is basically a basket of futures that are weighted in the two serial terms. So you're buying October and November VIX futures. And as you rightly pointed out, you're paying 15 and change for October and 16 and change for November, which is way, way, way over where VIX cash is trading. That Dr. VIX's bailiwick, which is still around 1223 as things are printing right now. So the custodians for VXX, they own those futures, and every day they take some of their October future, or in this particular case, their near-term future, October, and they sell them, and they buy November to stay kind of balanced on their, what they're saying is like they're trying to kind of wait a 30-day duration, meaning they want the futures that are closer in term to sort of show up more in their calculation. So by the time they get to October expiration, they have sold out of all their October, and they are now totally long November. So there are some games, we talk about this in our chat room and stuff in our education about there are games you play with VXX, and there's a lot of cool trades. Most of them actually are to the opposite direction that everybody uses the products for, more to the downside. There are times when VXX is a great purchase. I don't know if today's one of them, even though, VIX cash is up a little bit. The vol product itself, VXX, is actually down a penny right now. UVXY is up a couple of pennies. So again, they're trading off that future value, and that future value is kind of linked to the cash. So if you want to buy VXX or UVXY or those two products, UVXY is just a double, you really have to have an expectation that the futures are going to fly. They certainly can. We've seen it last, 2 weeks ago, they flew to 20. And a product like VXX, which is now trading 35, was trading, $44, I think, at one time. UVXY was up there as well, like $24 or something like that. So, and that is up 50%. So they certainly can move when the futures move. But if you don't get enough movement, if you don't get the action you want, they're just going to kind of decay and rot away and slide down. So one of my rules for trading the vol products is, you kind of want to create positions that are almost short the vol product when nothing's going on. But you want to create positions with kind of what I'll call a strangle or like a straddle curvature when they start to move. It might be counterintuitive. You're saying, well, Andrew, you're selling the vol when it's low and then you're buying the vol when it's high. But the nature of volatility is, or the vol products, they just kind of trade like that. So obviously there's a little education that goes along with that, but it's a system that we have that tends to work okay. But we're always if we buy puts, let's say in VXX, we almost always have some little upside hedge somehow. And you can do that with VIX as well, buying calls and puts in VIX when we were in contango. But for the most part, VXX just buys futures. They roll futures. And when you buy VXX, you're buying futures, which right now are, unless something really happens, they're a little pricey. And I'll end it right there and let Dr. VIX come in and drop a bomb on everybody's head.
You know what I'm going to dress as for Halloween? I'm going to dress as Dan Aykroyd from Dr. Detroit, but I'm going to have a big medallion that says VIX on it. When you say Dr. VIX, that's what I actually picture.
You're going to scare all the kids. All the kids in the neighborhood are going to go run screaming.
A fedora.
Yeah. So that was one of the best movies ever.
What does Dr. VIX hand out for Halloween? What does he give? Like little, you give little what do you give out for Halloween? That's the VIX related item. Is it a little tchotchke? Is it a fractional share of a VIX option?
No. I just print out tear sheets about product specs and put them in kids' bags.
Oh, so you're going to enjoy cleaning the eggs off your house come Halloween.
Yeah, exactly. So no, I am so removed from whatever goes on with all of that kind of stuff in my household. I just wait until the night is done and then pick through my kids' candy and figure out what I want. So with that, I'm going to get back to the topic at hand. I would say that next week is a very likely week where you might see VIX up one day and VXX down just because of how steep the contango is, which will give me blog fodder to explain exactly what VXX and how it's not VIX. But when you got VIX at 12 and a quarter and the front month October future at 1535, it is very, very possible that you're going to see VXX under pressure, even if VIX moves higher. And then, by double association, UVXY and TVIX down as well. So it's just one of the, I was not even aware at how steep that contango was until you guys pointed it out, because we got 3 weeklies between now and the October 19th expiration date. But man, that you're looking at 310 right now. I don't know why, or heck, it just changed to you're looking at $3.10 of a spread between the front month and spot VIX with 4 weeks to go.
Speaking of,
that's just huge.
Speaking of spread, I'm not liking this VIX cash drift to the upside here as the show is going along, because I was almost exactly on with my 11.75 as the show started. Now we're at 12.25. We're half a handle away. We're drifting away. We're getting closer to Sebastian's prediction, and I just don't like that. Of course, he's still the Price is Right rules. I'm still crushing him, so maybe we'll have to go that way this week. All right, and let's see. Still, speaking of the week that was, it was a pretty active week volume-wise out here in the VIX options. Before we get to the mothership, though, Mr. Rhodes, your domain is All Things Weekly. What is cooking in Russell's Weekly Rundown?
Now, Russell's Weekly Rundown.
So right now, there's a pretty darn interesting trade that went off this morning in the VIX weeklies in the September 28th that expire next week. Somebody did in two 500 lot, so they did 1,000 lot. They purchased the 13.5 calls that expire next Wednesday, and they sold the 13.5 puts that expire next Wednesday. And what they ended up with is a synthetic long position in VIX, which was very close to where that VIX future was at the time of 1342. And then they basically constructed a collar. And the collar was the way that they went about constructing the collar was they bought the 12.5 put for 18 cents and sold the 14.5 call for 68 cents. So they've got upside to 14.5. They could actually make the whole trade was put on at a credit of 18 cents. So some sort of VIX rally from here, and expiration next Wednesday morning above 14.5, they could pocket $1.18 for this. And if we get the volatility crush like we're getting right now, their worst case scenario, from what I can tell, is a loss of 82 cents. So it's kind of a cool risk reward with respect to the to where VIX is right now. They're okay if we get a spike, somewhat okay if we just end up back into the mid 13s. Of course, they did this trade a little bit earlier when VIX was at a little bit higher level as well. So that was a good one. And then first thing this morning, I guess somebody was looking out for lower volatility. We had a seller of almost 3,000 of the September 28th 13 calls just as a straight up trade at 75 cents. And as I was taking my notes to talk about all things weekly in the VIX area, somebody actually came in and started buying those same calls at 60 cents. I don't know if they day traded them for 15 cents or if it's somebody with a contrary opinion, but seeing a two-way action in the 13 strike calls that expire next week. And that's unfortunately, as we know, that area is not getting a whole ton of attention unless we've got an event or something else on the horizon. So that's really it with the big trades we can talk about. There was one more kind of bull call spread using the October 5th. It looks like they purchased 664 of the 13 calls for $1.30, and then went up to the 20 strike price and sold those calls for 18 cents and a net cost of $1.12. So somebody looking for a spike in volatility about over the next couple of weeks as well. And with that, I will pass things back to you.
Thank you for that, Dr. VIX, as I watch VIX Cash inexorably creep north just to mock me here throughout the program. But speaking of VIX, it has been a fairly active week. I'm trying to recall, Dr. VIX, maybe you, or should I say forthcoming Dr. VIX, currently corner office man. I can't recall the last time, if ever, we've seen a collar going up in the weekly VIX options. So that might have to go down as a first, least sizable use case that we've seen. Just anything related to the puts is already interesting and worthy of note out there, particularly in the weeklies. And then now we have a collar going up, which is a pretty interesting stuff out there in the weeklies. Thank you for that, Mr. Corner Office. Moving on again to the mothership products. Been a fairly active week for the big VIX options. As you might imagine, Miss Yellen and her crew, they should, the SIBO should be very happy whenever they pop their heads out of the sand, because it usually tends to drive a little vol, a little bit of activity, particularly out there in the VIX options and futures. Even today, a fairly light day, all things considered, but not so much in the VIX options. They're lighting it up to the tune of about 350,000 contracts already today, about halfway through the session. So on track, if they hold this for the rest of the day, pretty much to blow past on the upside the ADV, which is a little bit shy, actually, of 600,000 contracts, or now about 575,000 contracts. And yesterday, Thursday, was also a very active day, about 751,000. Now, stop me, you guys, Mr. Rock Lobster, Mr. Corner Office, stop me if you've heard this before. I don't think you have. I think this is new, but we did see something going up yesterday in the VIX options. I believe it was called a 1x2. Have you ever seen that before? I think it's kind of new.
Tell me more about it, please.
What is this 1x2 that you speak of? This mystical thing. Well, it was actually a little bit different this time. I'll give them that, because we were just talking last week how the size 1x2s went out rolling from OCK to NOV. This time, if it was the same player or someone else just aping for size, someone doing it this time in Jan. So this might be the first size 1x2 we've seen going up in Jan. It was indeed the Jan 1723. 1x2 going up about 25,000 by 50,000 times, so a total of about 75,000 contracts. So this, as I recall, probably the first size 1x2 we've seen going that far out. We've seen a few going up in DEES. Obviously, last week we saw a ton in OCK and NOV, closing mostly in OCK, rolling out to NOV. So there was some size activity there. Also on Thursday, we saw a size upside, this time blasting out the NOV 21s to the tune of about $1.22. 31,000 times, so some fairly active sweeping that across as much as you can there in terms of hitting every bid you can find out there for the NOV 21s. Also saw a bit of a funky put spread, times put spread. Don't see many of those. OCK DEES, OCK 14.5, DEES 15 going up exactly 20,000 times out there. Looks like paper perhaps rolling on out to the DEES from the OCK. So interesting stuff there. And if you weren't confused enough by the 1x2s, how about a 2x1? This time OCK NOV going the other way, going OCK 21 NOV 30. So doing a bit of a time 2x1 instead of a 1x2, 17,000 by 9,500. So a little bit of a ratio, selling the 21s this time, buying the 30s. I don't know if I like that one as much. The short 2 long 1. That's as we've seen how the reason you put that 1x2 on is you want to be in there when it all goes to hell, when it all hits the fan, and you want that pop. When you're doing it the other way, I don't know. You're kind of playing with a little bit of fire. I have to look at the term structure, the gap between OCK and NOV to see maybe there's a reason why he's favoring the OCK over the NOV. But that seems to me to perhaps be a recipe for early retirement from the trading business if you're going to do a lot of 2x1s out there. Moving on to Wednesday, also about a 700,000 plus contract day. Not a surprise given the fact that Miss Yellen and her crew were in full operation. We saw some size sweeps again, this time of the OCK 19s. That sounds like I'm Irish there. OCK 19s, OCK 26s going up 71,000 times for 52 cents. So just size on the OCK upside, OCK 26, just a massive print there. Also saw NOV Jan. This time the 21 call spread. So moving from maybe NOV out to Jan. Why you're rolling NOV now? Kind of an interesting question if that is indeed a roll. Both prices going up exactly mid-market, so we'll have to dig a little bit to see what they were up to. But about 21,000 by 15,000. So looks like it probably is a roll when you see those the second leg, and it's a little bit less chances are it's probably a roll, and probably the initial leg didn't go in your favor. Either that, or you're moving to a much more pricey strike or a contract, which in this case they are. That's about a buck premium for the Jan versus the NOV. So that could also account for a little bit of the smaller size on the farther leg. And if you weren't done with ratio verticals, that's good because we got more for you. This time it was an OCK. This is about a 1 by 1.5. This is the OCK 1825. It seems like ever since that 1 by 2 paper started going up for size, everyone and their mother is trying every different flavor of it they can possibly think of. This time we have the OCK 1825. 1 by about 1.5, about 14,000 by 20,000. So at least getting this ratio right, doing more on the upside. That tends to be the way I frown upon this less that way than the other way our friend had it. So yeah, deciding maybe 1 by 2 wasn't exactly in the cards for him. Going 1 by 1.5. Tuesday, also about 600 plus thousand contracts, 661. So another active day out there in Tuesday, leading up to the Fed. And yet again, stop me if you've heard this. VIX 1 by 2. This time OCK 1721, 15,000 by 30,000. So exactly 1 by 2 going up there as well. So you can pretty much you can just roll the cards, roll the dice, pick a month, pick a strike, and chances are you're going to have some sort of 1 by 2 or ratio vertical action going up on that strike in every given week. Time spreads also the other flavor of the week this week. OCK NOV 28 also going up on Tuesday about 13,000 times for, looks like, moving out to the NOV 28s. And let's see, a couple other trades on there on Monday. Monday, a little bit lighter day, about 550,000 contracts, so a little bit slight on the ADV. And one last time, in case you weren't fed up with these ratio verticals, yet again on Monday, if you haven't gotten the hint by now that this trade may work, going up yet again, the OCK 1721. Yet again, those are popular strikes for this, going up about 12,000, almost 12,000, a little bit under, by about 23,000. So a little bit of a ratio, about 11.5 to 23. So about the right ratio there. And again, doing that the same way you normally would on most of these. So yeah, just 1 by 2 Palooza. That's pretty much just every week now. It really is amazing to see. I can't really think of another product except maybe back in the heady days of Apple when it was pushing 700 and everyone and their mother was just buying calls all day long, where I can think of a product that was just lining up for one strategy over and over again as much as we're seeing the VIX. This thing has got to be getting the life squeeze out of it by now. And if not, the market makers should be fading this thing to death. Yet guys are still putting it up. Maybe that accounts for some of the funkier ratios we're seeing because people are just squeezing this thing. The market makers are fading it, and they have to kind of maybe adjust their ratio a little bit. Still 2 by 1. I'm not on board with that. Moving on to what was the hot business this week, the hot strikes, the hot action out there in VIX land this week. Not surprise, OCK 21's leading the charge, about 240,000. All those 1 by 2s helping that out, undoubtedly. The ever optimistic OCK 30s, that 30 strike refuses to die. We said it before, and that is still the case again this week. 218,000 contracts open there. Then we fall off a bit to the aforementioned OCK 17s. Again, those ratio verticals helping out there as well. About 177,000 contracts open there. Down to number 4, it's the OCK 20s with about 172. OCK 26s taking the number 5 spot with 167,000 contracts. Then we fall off again a little bit to the OCK 25s with 156,000. Then we fall off a little bit more, all the way down to 113,000 contracts for the first put on the list, the OCK 17 puts with about 113,000 open. Then the NOV 30 call. So yet again, the 30 strike refuses to give up the ghost. 107,000 contracts open there. Number 9, the second put and the only other put on the list, the OCK 14s with about 102,000 contracts. Then we fall below 100K for the number 10 slot, again showing that the open interest has fallen off a little bit as you'd expect this time of the old month. The OCK 28s with about 98,000 contracts open. Total of about 4.8 contracts open, 4.8 million, I should say, 3.5 on the calls, about 1.3 on the puts. That's about 3 or so million less than the last time we checked in. So clearly, obviously, this time of year, the OI falls off a wee bit. Anything else, Mr. Rock Lobster or Mr. Corner Office, you want to add on all things VIX options or VIX futures in general before we move on to some of the commodities and, of course, some of our listener questions?
I do. I have a question for the doctor, Dr. VIX Medallion, Dr. VIX fedora. I've got that whole image now in my head. How cool Russell's going to look with that whole outfit on. And like a purple velvet jacket. I think that's going to look good. Anyway, how about, what was the net, let's see, not net drop, but how about percentage drop in VIX terms? I know a percent of a print, it drives everybody crazy today. What do you think about that? This week, it was almost like, we're like 16.5 to 12. I mean, it was, breadth of move was pretty spectacular. I was just trying to wonder where that might rank in terms of 1 week drops for VIX.
Gimme 5 minutes.
That was my big question for the Russell Meister there on that one, because I thought there was, we had our kind of peak to trough move was super whippy, and I don't remember it moving just that fast before. But not that, I mean, I've seen drawdowns in vol before, but on percentage type basis, it felt like they hit the bottom button pretty quick on this. That's all. That was my big question for Russell. It just felt like a big move. My gut, my instincts, whatever that is just saying, gosh, this feels kind of big.
Well, really, I've got the data in front of me. Somebody asked me to do something else with weekly data over the last weekend. So I have the numbers right here. It's going to take me probably just finding the data sort to tell you what the biggest percent moves have been on a week over week basis. Let's see, smallest to largest. Biggest, there's nothing more exciting than listening on the radio,
listening to data,
somebody do their Excel spreadsheet.
Listen to data analysis.
Biggest drop ever. Last full week in June, which was a 42% drop. And basically what that was the Friday of Brexit to the Friday after the week of Brexit. So that was our, which involved some sort of an event. Where did we go out last Friday? I'm sorry. I'm trying to do multiple things here.
Let me look here. Give me 2 seconds. Because this makes great radio. Radio. I totally screwed up Mark's show. He's like, thank you very much, Andrew. You're a super awesome guest for screwing my show up.
This is why we bring you on time and again for live data acquisition.
Okay. VIX closed at 1537 on last Friday.
Yeah, so that was the 16th, right?
Yep. And let's just say we're at 12 1/4. So how much have we dropped? It's not really that big of a drop in the historical context. It would be, I'm going to say it's going to be about the 25th biggest drop since 1990, which is not. It's a 20% drop. Oh, wow. That ranks, if we closed right now, that would rank us as the 42nd biggest drop in VIX on a percentage basis, which we know Mark Sebastian just loves.
Right.
Yeah, he's rolling over in his grave as we speak.
Bigger.
It does feel bigger, and I think maybe because just the last 2 days of crush that we've gotten probably did make it feel a little bit more accentuated. And we did drop from the 17s 2 weeks ago, so that probably helps as well. The 2 week drop is closer to like 40% or so.
Yeah, you're probably like me, Andrew. You're thinking back to the middle of last week when it was in the high teens, and it seems like a much larger drop than it is from 15 odd to about 12 odd, which isn't net that as big as a move as you're right. It did feel a little bit more of a move. Speaking of moves, or perhaps lack thereof, let's look up the commodities again. And we kind of just could just cut and paste from last week when it comes back to this week when it comes to crude vol. Still nestled, the OIV OVX at that 40 strike. Doesn't want to move from that, at least net week on week. So crude vol pretty much unched. What is interesting, though, out there in the metals vol, gold was a very volatile product over the last few sessions, last few weeks. Not so much. Gold vol coming in quite a bit. In fact, our old friend GVZ, which is the CBOE VIX on GLD, the popular ETF that a lot of you guys out there like to sling, hit a 52-week low earlier this week of about 13.73. So GLD vol and gold vol as a whole kind of coming off quite a bit, certainly post the Fed. Of course, bouncing a little bit today, still south of the 14 handle, but very close to that 52-week low right now still. I don't know, Mr. Rhodes, do you watch a lot of GVZ on a regular basis? And was there anything worthy of note over there in SIBO land when GVZ hit this relatively substantial level earlier this week?
Well, I think it kind of snuck under the radar since there's not really anything tradable on it, and it wasn't associated with some sort of move out of the underlying. But you said a 52-week low. I think it's more like a 104-week low or something like that. I think we go back more than a year since we've seen GVZ with a 13 handle. So this is significant, and it's surprisingly significant. Just again, there's all this weirdness with the numbers in the world relative to what you see going on in the world, and you wonder, why isn't anybody afraid? Does Grandma Janet just make us feel that warm and snuggly every night that we're not worried about anything in the world anymore?
Speaking of Grandma Yellen and our fears or perhaps lack thereof, it's a perfect segue into your comments because it's time to check in on the volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, and welcome to the Volatility Voicemail. This is indeed the portion of the program where we break down what you guys have to say. You guys had a lot to say over this past week, mostly a lot of different comments about a lot of different stuff. We'll see how many we can get to here on the show. Make sure you guys all get some love. And, of course, no live love this week, so you guys will have to send them in on demand after the fact. Unfortunately, for those guys out there who love to give the Rock Lobster a hard time. You guys know who you are. All right, let's move on. You were talking about Aunt Yellen over there, Mr. Rhodes. Well, Jim Investor says the short-sighted market is over-focused on Yellen, and soon, I like this little ominous warning here, soon they will eye Trump widening his lead in the battleground states. So he's like, forget about Yellen. Trump, perhaps the real risk factor that's going to start driving some vol in the coming weeks and months. Certainly, perhaps leading into the election cycle. I don't know. What do you have to say to that, Mr. Corner Office? Trump, the real driver of VIX going forward, perhaps.
Oh my goodness, I'm scared to death to even talk about the election.
Get political. Let's go for it, baby.
I know.
Everyone loves that, right? That works.
I'm scared to death to even touch that one. What I would, unfortunately, I'm going to be at Risk Management next week, and I believe we get the first debate Tuesday. I think that will be the first nice indication that if one of them comes out ahead of the other in the debate, as to what the financial markets are really hoping for. If the financial markets are reacting to a potential Trump presidency, and I think I saw where one of those betting sites, his odds went from like 9% to 48% over the last week or so. If that's true, then why is VIX making you the winner of the prediction this week? I don't know if his potential winning, and I don't really know if the financial markets are paying attention to the election yet, because I don't know if there's any certainty as to which of the two candidates would be better or worse for Wall Street.
Yeah, definitely a lesser of two evils looking out there. But of course, you're right. I don't think the street is really fully focused on it yet. And I also don't think it's still that close of a contest where I think they really need to. Maybe if it was a close contest, I said this on Option Block yesterday, I think if it was a really close contest between two completely opposed candidates like maybe a Sanders and Trump, that would have been something interesting. If it was neck and neck with those two, we would have seen some serious vol going into because those two are pretty diametrically opposed on a lot of different issues. Trump and Clinton opposed, but certainly not as much. And so it'll be interesting to see. I imagine, I think our friend Mr. Jim Investor may be overstating the Trump effect on volatility. But perhaps not. We shall see. Moving on to John King. He writes in a lot. He says, since SPX has 15 plus non-standard expirations per month. Is it up to that many now? I have stopped counting a long time ago, but if that number is correct, a lot. That sounds like a heck of a lot. I'm gonna trust John on his math. That's it. That's a lot. He says 15 plus non-standard expirations a month versus one standard. Isn't it time that the SIBO truly standardizes the monthly? That number, I'll have to do some quick math. It sounds like he's right, though, which is, I hadn't thought about it in those terms before. That said, I'm not sure what he's getting at here. Standardizes the monthly. You guys know what he wants?
I got this question from another source this week as well. So maybe it's the same person, but he's probably pretty accurate with respect to 15 non-third Friday expirations out there because we've got month end and we've got Mondays and Wednesdays. But I think the reason that the nomenclature of the standard options is sticking around is because, and it's a good reason for it to stick around, the standard third Friday options on the SPX are the only ones that are AM settled now. So that's the big difference between the non-standard and the standard. It's not necessarily the day of the week, and of course, as he mentioned, they're just about as many non-third Friday as third Friday expirations. But for those of us that want to make sure we know whether or not we're trading an AM or a PM settled contract, I think it's helpful to have that type of naming out there right now. Still.
All right, moving from someone who perhaps is a little overwhelmed by the explosion of weekly offerings and quote unquote dailies to someone who loves them. Mark Brandt, he also is a frequent writer inner and a big fan of the Rock Lobster most times, and he's written a bunch of things. He says first off, he said. He sold, this is a couple days ago, he sold SPX Iron Butterfly, I guess that's his trade du jour, wide 4 times every 10 points today. Dailies rock, so he's loving the dailies. He's always advocating these daily trades. He also likes Mr. Rockloss, and maybe you like this one. He likes to sell the VIX 2-month, and he uses this. It's so hard to get trade notation through on Twitter in 140 characters. Looks like he's saying 5 handles out of the money, and then so a 5 to 9, so a 4 handle wide call vertical, I guess that's what he's saying here. Risk 1%, $4, and do that daily. He keeps going on about these daily trades. I don't know. That's an interesting approach. I never had people advocating to me before doing this same trade, unless he's talking day trading. But I don't know if he's talking about that or if he's talking about more doing it net aggregate day after day for the entire week, in which case you'd have a pretty sizable position, I would think, at the end of that week. I don't know. Mr. Rock Lobster, what say you to this approach here? And just the notion maybe in general, too, of doing smaller little chunks daily versus one more sizable trade perhaps once a week.
I think the reason why I think the daily is interesting, I think he's just saying, okay, every day I'm going to put these on, right? I'm going to look at how things set up, and maybe I put them on the day before to take off is what it sounds like. I don't think he's going to have 8 different positions on at once, because it would defeat the advantage of just, the best thing about something that's going to expire in 2 days is just, you put it on Monday night if it looks decent to close on a Tuesday, and you know that your risk is kind of, it's at least it's contained for the Iron Butterfly, or you wait until the morning, you put it on. Trying to fade, let's say you're using the trade to fade whatever's going on in the first half hour of the day. But then it's done, that day you're out. And you don't have any residual overnight risk. So you're like, okay, I'm just going to do these every day, and I'm going to see if I can pound away. if I think that premium, was expensive or just a little too expensive for what's going on. And, you don't have the multiple day risk. I mean, most of the problem with option trades is the overnight risk. So I think he's trying to figure out a way. And this is something we're going to talk about in our webinar on Saturday. Just since you have expiration now 3 days a week, that gives you a little more, some of our clients have liked it for fading the market to be able to sell, sell out of the money put spreads or call spreads. They know that they're going to expire in 1 day. Unless you have statistical aberration for follow through, you make money. So I can see how that could be appealing. I can see that.
Yeah, interesting approach. Certainly the dailies do, one of the nice things about them, they do offer quite a bit of nuance in the approach you want to take. And that is certainly one way to go. Or you can be like Mr. King, who's like, hey, I'm not a big fan of all this myriad of weeklies out there. We'll wrap it up with this. Lots of comments this week, which I like. I like people sharing their thoughts with us as opposed to just 5-page questions. We like those too, but these are a little bit easier to get through. Let's see. We got last here. This is the fun one. We'll wrap up on this one. This is your old buddy, Mr. Corner Office. This is Think Tank Trading. He asked last week why you blocked him. He was apparently very excited to be featured. He says, all right, first my question gets on volatility voicemail. Next, the world, mwahaha, evil laugh. So I like this guy. Hopefully you unblocked him because he is a character. I like that. All right, so I think with that evil laugh, we're going to wrap up the volatility voicemail and go on into a very heartbreaking edition of the Crystal Ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the Crystal Ball. As I mentioned, this is going to be a tearjerker, a heartbreaker, because this just shows, this episode perhaps more than any other, shows how much the VIX cash giveth and the VIX cash taketh away. And this week, it was giving to me so much. Even at the start of the show, I was almost exactly on with my 11.75. And as the show, I think we were just talking up VIX a little bit too much throughout the show, because as the show has transpired here, VIX has rallied to pretty much about 3/4 of a handle, about pretty much exactly where Mr. Greasy Meatball predicted. So he predicted 12.5, and we're pretty much almost exactly there now. So in the span of one show, in the span of not even the full episode, I've gone from being a exact victor to handing the victory to the Greasy Meatball. He's not even here to accept it, which is just wrong. So there we go. The VIX giveth, the VIX taketh away. I'm gonna make a new rule that if I'm winning at the beginning of the show, that's it. We just stamp it right there, and then go on with our lives the rest of the episode. But no, I'm gonna be fair.
You're gonna change the rule. You're gonna change it if you lose one. Then you're like, it's my show. I'm gonna change it whenever I want. It's my show.
Gosh darn it! And if I win at any time during the program, that's when it is frozen for the rest of it. No, I'm gonna play fair. I play by the rules, and I can lose with grace, even though technically I was winning until a few minutes ago. All right, I just wanted to point that out. All right, and here we are this week, of course, VIX Cash hovering exactly at that 12.50. So your better/worse half, Mr. Greasy Meatball, or Mr. Rocklops, I should say, getting a win in the win column this week. So that translates to you somehow in this weird game that we play. So you get the choice now going forward. Do you want to pick first, or do you want to pick someone else to pick first?
I'll tell you what. I like the idea of picking first. And you know what you reminded me a little there? You reminded me a little of Gollum in Lord of the Rings. It's mine. It's mine.
It's my precious.
The win is mine. I'm not going to give it away. It's mine.
My precious victory.
It is. So I'm just going to go and I'm going to say 12:25 next Friday. Boom. That's it. We don't do anything.
All right, and I was, I guess, second. Actually, no, with this rally, you were a half a handle away, Mr. Corner Office. So you get to go next. So actually, I was in third place. I went from winning to being in third place. How ignominious is that? So, Mr. Corner Office, take it away while I wipe away a single tear.
Ignominious? Is that what you just said?
Ignominious, God, yes.
It's a big word.
I bust out the thesaurus every now and then.
I gotta buy a thesaurus. I think we're gonna drift a little bit from here, maybe about 1340. You know what? We've got, gosh, it's almost like you want to buy a straddle, although there's not much downside here. but the it'll be there's a wild card next week, which is that debate, and man, just you never know how that thing's going to go. So I'm going to stick with 1340, but I wouldn't be surprised if I'm low. And I know you're not going to go above me there. So.
No, you're safe to the upside. You've been talking up VIX for almost as long as I've known you here on this show. So
well, I love VIX. I love volatility. Yay, the market's crashing. Woo!
Your bidding of upside has been almost as impressive as the legion of 1x2s we've seen going up out there in the VIX options. Well, once again I'm going to fade. It worked well until about the last 42 minutes, and then it callously ripped my victory from my hands. But the Trump factor that our listener brought up and that you referred to perhaps could be lurking in the rearview mirror. Perhaps I'm underestimating the Trump effect on VIX, but I'm going to be pretty safe in saying I'm not, and I'm going to go back to the dark side. Andrew was 12 and a quarter. You were 13.40. I'm going to be back to my dark side. I'm going to say 11.6 over next week. So not quite as low as the week before, not quite as high.
Oh my God.
So light, sir, light, ladies and gents. We shall see if once again I have victory ripped from my grasp next week, but we shall see. Either way, that's going to do it for the Crystal Ball. It's also going to do it for this episode of Volatility Views, maligned by technical issues, but we still soldier on to bring you a show, listeners. That's how much we love you guys out there. But before we go, really quickly, check back in with my cohorts here, my partners in crime. See what they're cooking up that may interest you. Mr. Rock Lobster, sounds like you may have something interesting that may interest a lot of our listeners who are clearly obsessed with all things dailies right now.
Well, we try. We are going to talk about dailies, trading dailies, short-term trades with daily, short-term trades with dailies. Of course, there's short-term trades with dailies, but vol selling and when they might not be appealing. Also, just some of the characteristics of how crazy fast the decay could be for a daily option. So that will be our Saturday class. Next Saturday. Fancy that.
Fancy
Saturday class next Saturday.
Fancy how that works. Optionpit.com to learn more and to register, listeners. And before we go, Mr. Corner Office, what is cooking in the land of all things options? Institute, CBOE, live vol. Take your pick, sir. What's cooking?
Well, it's funny because you've asked me like 3 weeks in a row if there are any updates coming from live vol, and they've all been camped out at CBOE this week, and I got to spend about half a day with them, giving them ideas for a revamped by late October version of live vol. So keep an eye out for a new and improved version of live vol in the next few weeks. As far as the nearer term and myself, I am headed over to CBOE's 5th annual European version of the Risk Management Conference, which starts next Monday about midday, runs all day Tuesday, runs a good portion of Wednesday, and then we're all coming back, and I'll be back here on Friday to tell you guys all about it.
Unfortunately, I won't be able to hoist a Guinness with you in Dublin, Mr. Corner Office, but I'm looking forward to your synopsis. This is always great data and research and analysis on tap, pun intended, over there at the Risk Management Conference in Dublin or otherwise. So I'll look forward to hearing that next week. And of course, listeners, you guys can check it out for yourself. If you are going to be in the area, CBOE RMC is what you need to search for, and you can find out information on it. I'm assuming there still are some tickets available at this late date, Mr. Corner Office. And of course, if you want to learn more about what the folks at Live Vol are cooking up, I'm looking forward to seeing this new iteration myself. I'm looking at their site right now on the website, and it looks a little bit different already. So updating things, search on over to livevol.com. And if you want to check out all that great bespoke data we're always talking about, then just datashop.cboe.com. And that's where, of course, you can get, if you want just front month weeklies for these last 3 months, something along those lines, well, then you could do that. Front week weeklies, I should say. You can do that. You can do whatever you want, whatever weird progression or data set you want, they can carve it out for you. Check it out, datashop.cboe.com. And on behalf of Mr. Corner Office and the Rock Lobster, and indeed myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the show, for sending in such great questions and comments. Keep those coming, and we'll see you next time right here on Volatility Views.
Volatility Views is brought to you by Cboe Live Vol. Cboe Live Vol is the leader in equity and index options trading technology, providing professional and retail traders with the most sophisticated options risk analysis, compliance, and trading tools. Cboe Live Vol offers a broad spectrum of advanced trading technology, including the Live Vol X, next generation execution platform, and Live Vol Pro, the new standard in options trading front ends. Visit livevol.com for a 15-day free trial today. And by Russell Investments, the home of Russell Indexes, which calculates approximately 700,000 benchmarks daily, covering 98% of the investable market globally, including more than 80 countries and more than 10,000 securities. Approximately $4.1 trillion in assets are benchmarked to Russell Indexes. For more information on Russell Indexes and RVX, please visit russell.com/indexes.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.